let's back up just a little bit and tell me what is this thing? It's a trust. It's like an entity, correct? Or is this something more like a retirement arrangement, like an IRA, which I guess also is kind of like an entity itself. But it almost seems like it's got, does it have certain restrictions such as you might have with a self-directed IRA? You mentioned purchasing Bitcoin, and I know you in a IRA you can't do collectibles or uh, a certain type of asset. But what is maybe back it all the way up to what is explaining a trust? What's special about the deferred sales trust itself? So because you got to break it down Barney style for this
Yeah.
Neanderthal.
Yeah, no, it's good, Aaron. It's a great question. So it's a trust that we combine with a tax strategy or a tax code called IRC 453, known as an installment sale. And so your listeners and you likely know that you can carry paper, meaning you can become the lender for a buyer on your asset. And to the extent that you're in a deferral state. And so I'll give you an example. We just helped a client who was selling a $16 million business out of Oregon, and it was a dental practice sale, multiple practices, and their basis was zero. And so the state of Oregon has about a 10% capital gains tax rate or income tax rate on the gains. The federal has 20%, and then you have Obamacare that typically can kick in. On active businesses, it typically can kick in, but we'll keep it at 30. Well, that's 30% of the gain, right? It's going to be taxed. So it's a massive, massive tax hit. And so instead of taking all 16 million at closing, they sold first the asset to the trust in exchange for a promissory note. Now they did it in tranches, and so they'll get multiple promissory notes over a period of time as they get money from the buyer. It's different earnouts, but that's basically it. You're exchanging the ownership of the asset. You're selling it to the trust in exchange for a promissory note, and the trust itself sells it to the buyer. It's like a back-to-back sale. And so since the trust bought and sold Aaron for the same price, 16 million and 16 million, the trust has no gain. And since the trust is paying you in installments, the seller is only paying tax as they receive payments. And so to answer your question more fully, it's kind of like an IRA. If you think about it, what happens in an IRA? Well, Aaron can put money into an IRA, a certain amount per year, right? That what is capital gains tax deferred and income tax deferred until when? Until a certain age, he has to start taking money out, required minimum distributions. In a deferred sales trust, there's no required minimum distributions, but it does defer income tax and capital gains tax. A little caveat to that: we do say that it's best to take out some payments starting in about year two. And typically, you can delay it for a couple of years. This strategy has been around for about 28 years. Thousands of transactions, has been through about 30 audits. All no change, no findings, billions of assets sold using it. But during those audits, we've picked up clues on how to even be more conservative in our approach. And one of those things is to make sure there are some kind of payments coming out, and that there's tax being paid and reported. At the trust level, though, there's typically no tax at the trust level because the trust bought and sold for the same price, and it can also expense what it owes the note holder, right, on the interest. And so every year in year out, even though it's earning, it's typically able to on paper have a loss. And so it's a very elegant, efficient tax deferral strategy that combines IRC 453 and what's called a business trust.
So okay, you personally are one of the what would it be, members
Well, the
of
trustees, so I'm a trustee, so Capital Gains Tax Solutions. So I have my own company, and so we serve as a third party, unrelated trustee, and we focus exclusively on working with the creators of the structure, which is a tax attorney, CPA, and they're the ones who do the legal work. And so ours is kind of like the day-to-day management of the trust, right? And so helping to connect with third-party real estate operators or funds, third-party financial advisors, and we basically kind of build a team and help to execute that team. I played sports growing up, played football and basketball in high school, and then played some basketball in college. And so sometimes I'm like the point guard, directing the troops, directing the team. Sometimes I'm a player on the sideline, just cheering on the entrepreneur. So one of the biggest things to understand is this is not just a retirement plan where you're passive. You can be an active entrepreneur. And if you couldn't be an active entrepreneur, this wouldn't be as valuable as it is. But the fact is, you can partner with the trust and do a joint venture partnership, and then you can go build an apartment complex. We had a client; he sold a $3+ million business sale. He deferred all his tax, and then he built 20+ units in Tennessee, all tax deferred. Great outcome, right? And that was awesome. We had another client sell $5 million of Bitcoin. Deferred about 1.85 million of tax, and used 4 of the 5 for startup capital and like a Khan Academy online educational platform for kids, and that's what they use the capital for, all tax deferred, right? And so my role is simply is to navigate and help them to execute on the business plan. And as you know, Aaron, people can have ideas, but it's the team that executes the business plan that makes all the difference. And so that's my role as a trustee, to help provide a third-party, unrelated ability to keep the tax deferral, and then the day-to-day execution of it, working with professionals.